We have a lot of AMC to go over. Let's get right into the video. All I ask you guys to do, it's free. Hit the like button, hit the subscribe button, and make sure to watch until the end so you don't miss anything over here on YouTube. I'm putting this out so you don't have to spend hours watching every single AMC YouTuber. So without further ado, let's just jump right into it. In yesterday's video, if you haven't seen it, we are tracking something like this with AMC, not necessarily exactly to the T, but this exact time frame. So it could play a little bit inverse until coming to the point of interest to make a rip, right? This is right before the rip that we had back in January. And for entire context of this, you would have to watch yesterday's video. Now, the fails to delivers are out, and you can see them right here. We have had a major rise in FTDs. AMC's data across the board, Ortex for the NYSE, fails to delivers, they are all nearing all-time highs and are very maxed out. In fact, the borrow rate for AMC hit 868.7% per share. This is the highest AMC has ever been since April at 979%. Now, I want to point out one thing. Coming back over to the failed to deliver chart, you can see right here the closeout date is July 17th. T plus 35 closeout date, July 17th, for over 3 million FTDs. Now, if we jump back into the chart and we take a look, okay, the last time AMC's cost to borrow was this high was back in April, right? Beginning of April. And we also want to pay attention to that closeout date. Now, if we go back to April, this is when AMC hit the exact low it's hitting right now at $4. $4 a share is, if not the bottom, very close to the bottom that short sellers can bring AMC. And you can tell because there's way too much pressure buildup down here for the time being. Okay, so right down here, AMC randomly gapped down, gapped back up, and then over on the FTD chart, you can see that on this gap, a ton of fails to deliver stacked up after that gap hit, right? It dropped to that low, and we're seeing the same amount of FTDs show up, and then when it gapped up, they were in trouble. And you saw a little bit of a rise, and some of those FTDs dissipate again. Now, if you come take a look at that closeout date, right, July 17th, this is exactly what it lands on. It would land on the peak of this short cycle before getting that essential rip. With that being said, I would expect AMC to gap up a little bit higher pretty soon, at least for the short term, right? I would watch for resistance right around $5.70, this relative high back here that we saw right around April 14th, April 13th. I would watch for AMC to scale back up to that over this week and next week, okay? That is essentially what I'm looking at. And then AMC may or may not make that low one more time again before getting the rip. On top of that, AMC is still currently on the threshold securities list on top of that high cost to borrow fee. Keep this in the back of your head as well. They have way too much pressure built up on them. AMC is just due for a major rip. According to Ortex, 22.93% short interest, utilization at 91%, and the cost to borrow is looking absurd. In about 1 minute in this video, I want to talk about some major fake news that we're going to get into. Make sure to keep watching. Cost to borrow is sitting at 1,000% for an average, 1,000% for a max, and a minimum of 881%. So that minimum that we saw where on Interactive Brokers specifically is reported, right? That is literally the minimum, okay? This is maxed out at the high bar, and this is the minimum right now. They're paying more than this. The pressure buildup is absolutely absurd. As for 4.64% short interest, utilization 29%, and the cost to borrow sitting right around 7%. Now, another thing to note is that over on Stockle Tracker, this is the highest the fees I believe have ever reported on Stockle Tracker, reporting that 868% fee, reporting that 667% fee, and these short exempts are extremely high at 343,000 a day, with not even that much volatility the day before the 4th of July when people weren't even looking at the markets and it closed early. They're in a predicament here, I'm not gonna lie. Now, I agree that it's time to sue, okay? Reuters right here posted this on Twitter, but it's not the legit Reuters account, but that doesn't matter, and I'm going to explain why. AMC Entertainment Holdings files for bankruptcy, citing overwhelming debt burden. This was posted today, July 5th, 2023, 9:22 a.m. And they even tweet along with it the same exact headline. Now you can see down here, Frank Nez posts that it's a fake page. It is a fake page. All content on this page retweets from actual Reuters page. This is the only tweet that doesn't retweet from Reuters page, and it's pinned. It's rather obvious. So this page retweets every single tweet Reuters posts, but this tweet they made up on their own. Now this link goes straight to their website also, just a way to spread fake news and not try to be held liable. Still a verified Reuters account spreading lies just like they do on the real page. This is exactly it. This is exactly the point of this entire thing. Even if this is a fake page, you can tell that it's still run by the same entity, right? This is just a way to not be held liable for spreading fake news, but still spreading the fake news. It's the easiest trick in the book. Now I agree with this tweet. Adam Aaron, get those lawyers ready. On top of that, you have to keep in mind someone created a fake Reuters account with precision just to make this exact article because it was the only one that they didn't retweet and the one that they made up on their own, and they even paid for Twitter Blue. What happened to protecting your advertisers, Elon Musk? AMC is a paying advertiser, and you let this blue dick yoke run your platform. What do you guys think about this down below? Do you think Elon Musk has any control over this, or even noticed this, or it wasn't picked up by the algorithms, or are there even algorithms in play to protect things like this? I mean, I guess if you see a account that looks legitimate for its entire span of being on Twitter and then makes up something fake, you can't really expect what they're going to make up and tweet. Not only that, Bloomberg also with fake news yet again. 88% of shareholders voted yes to the conversion of APE to AMC and 87% yes for the reverse split according to public records. Business is claiming that the meme stock base, signifying majority of people, false, opposes the settlement, which is literally fake news. They've purposely misled people just like Jim Cramer in order to keep new investors from piling into the stock as they're scared of yet another short squeeze situation like January and June of 2021. Now, whether you think the vote was rigged or not, this is still false news, a false narrative that they're spreading over on these articles. What do you guys think about these down below? You let me know in the comments. Now, before we move on to the charts and some extra news with AMC and GameStop, guys, make sure to pop in the Discord. The link is right under the video. You guys will not regret it. I post my trades as soon as I take them. I'm in there on the daily, so if you want to talk one-on-one with me, I will always be in Discord. Plus, there's options trading alerts in there. We post gains, post losses. There's a degenerate bets tab, which some of you guys might like. And we also just talk stocks all day long, so make sure to pop in there whether you're a beginner trader or advanced trader. Also, guys, if you want up to 16 free stocks, each valued up to $2,000 per stock, use my link, download Moomoo, and make a deposit of even a penny. Do it now. It takes 2 minutes to do so, and if you've done it already, use your brothers or sisters or moms or dad's phone to do it once again. That link is in the top of the description and in the comments down below. Let's get back to the video. GameStop is still sitting in this wedge. It's getting flushed to the downside right now, but it is still holding up. Honestly, I expected a bounce here to break out to the upside, but I guess GameStop needed a little bit of a cool off, probably needs to pick up more volume, but also keep in mind the sell-offs have less volume than when it actually scales up, showing that buyers are in control at this level. So this just looks like an accumulation phase, and GameStop is playing out this nice flag here to essentially break out at some point to the upside. It could come back down, retest this trend line one more time. That may be the case scenario if GameStop continues to scale down like this. I'd watch for a bounce right around $23.40 right off of this trend line. Now, GameStop's options chain still looking beautiful day in and day out, still bullish. I wouldn't even mind grabbing more calls on GameStop. It's looking beautiful. Short exempt stacked up a little bit as well, 25,000 on the third. Now, crypto exchange Hotbit executes a massive rug pull, selling a lot of tokens belonging to their customers. But apparently this may not be breaking news as they went bankrupt and have given users deadline till 30th of June 2023 to withdraw. All coins / token not yet withdrawn until deadline is sold today, which could be bullish, just kicking another bad exchange out. The US is headed for a more serious recession than Powell has predicted, according to the Evercore founder. Speaking of that, to close out the video, let's touch on the S&P 500 trading at 443.28, absolutely ripping heads off. Here's a loss that I took just to cheer all you guys up in case your accounts are getting slaughtered. I posted this in Discord. I had puts on the SPY. I let them ride out. I didn't have a stop loss. I didn't have a take profit. I just let them ride out to see what happens, and that happened. This is what it is, but the SPY is ripping heads off. However, it is fighting this trend line as hard as possible, this ascending parallel channel that is acting as resistance for the S&P 500, and there was a lot of volume on June 30th on this gap up, but it immediately hit that brick wall. In my opinion, the SPY is not going to break over this first try. Of course, I could be wrong here, but I expect it to come down, fill this gap, and come down down to about 436.50 and then come back up, retest, and break out of that channel. That is something that you could see in the very, very short term. There is also that gap fill down to 423 if these recession talks do play out sooner than we think. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to hit the like button on your way out. Share this video, have post notifications on, and drop a comment down below. I love you all. Lottery Stocks out.